Very, very good morning to everybody. Here it is Thursday. It's just after 6 a.m. Eastern Time. And quickly just go over the hangover session of the FOMC, which I hope that email yesterday in detail really helped you to go through it all and have your numbers and get a better understanding for it. I will make sure that that is a copy that continues to get shared the next time that we have an FOMC meeting. And I just go over here in the alerts room prior to the FOMC decision, 155, quickly threw out your math so that you could start looking around, see what you wanted to do, and wanted to make it pretty clear to everybody that if you do own further dated puts, your play is your small lotto money on calls today, vice versa. Now, we do have a futures room as well, and when you are in an FOMC day, your benefit is playing the futures because you're not paying for any kind of contract price. Therefore, there is no implied volatility on what you're buying. All you're doing is playing price. Show you that in a second. Go through everything as we go and come into the chat room. And again, Spicy Trader, great guy, love him to death. Asking the question properly because he loves to play the calls. 4100 is 408 on SPY, right? Yes. 414 is that December 13th CPI spike. And when we do get the move off of the FOMC, 90% of the time, the first move is the wrong move. And that move was to the downside. So as we got that little move to the downside, I quickly threw out here on your math, using again what we had here from the FOMC, seeing that we had a minimum of 88 points on any of our FOMC trades prior, and 4132 was the number you come up with. 4136 is the big Fibonacci. Again, just pointing it out, not guaranteed. But then I did start seeing some $3 trades passing on the 4130 calls as we went up there to 4148. Very, very obvious. Those were 5 baggers. But more importantly, I do want to point out is one of our traders that, and you can see me here screaming 4136, 4136, 4136, 4136. Big trades hitting here when we hit 4130 on the ES futures, which is about 10 points lower, and elongate using my chart with 4065, 4135. He got out of the trade. And where he got out of the trade was up 99 grand on the day. Just missed it. Like he said, it was kind of funny. I started laughing because he did think that he had 100 grand, but the commissions worked into it. So it is what it is. Anyway, here we are. Actually, and again, this is one of those things to give you confidence in the data that we share. The upper edge, safe edge yesterday, which I avoided throwing out because I knew we were having an FOMC trading day, was 41.2393. We broke it, but we closed down below it right there at 41.1921, which is right on that September high that we had fallen from, 41.1928. And I'll point this out to you as well. It was the day after the full moon back there in September. Going to bring that to your attention as we go forward here, because again, played the 41.55, 41.50s well ahead of the FOMC meeting. After the FOMC meeting, they were still there. Later in the day, which I wasn't paying attention to when they were up at 41.48.95, I know that these were a hell of a lot more than just 50, 60 cents. So again, great opportunity there to make some money on the spread. Didn't have to really get involved in any risk, but the risk now is on my February 3 trade of the week, which I initially got into this at 30. It's now at 67, 53 more or less. And we have a 5-6 point gap up, 5-point gap up as of right now on the QQQ, which I'll show you in a minute. But then again, got to go back and you got to look at your data. We just closed green 2 days in a row. 2 days in a row. 2 days in a row. Not anything spectacular, but we're heading in here at 7 o'clock an hour from now, where you've got the Bank of England, their interest rate hike, and then shortly after that, you have the ECB and their interest rate hike. and the comments that they're going to be making on those interest rate hikes as we go through the day, because Lagarde is going to be speaking not only at 10 o'clock afterwards, but she's going to be speaking again at 1:30. So you've got a lot of bearishness there that comes from her. Not that she's made a very large impact on most days in the market, but she is going to be making some comments as the day goes on. U.S. non-farm payrolls is going to be tomorrow for the jobs report. And tonight we have GAGA, Google, Amazon, Google, and Apple. So GAGA is going to be singing tonight, and it is going to be a very interesting end to the week. But again, full moon is on Sunday, February 5th. So as of now, we are inside of that window of the full moon. So very much something to pay attention to. And as we had been pointing it out as we progressed into this full moon, we are going to be looking at a major high or major low. And for very obvious reasons, because of where we are on the charts, the major high is what we are looking at. And therefore, in a week, we should start to see a little bit of a retracement, which I'll point out as we zoom out. But again, this is why I say to you on FOMC days, go and do anything other than trading until you come into that 2 o'clock period. Got that little bit of a dip right there into the press conference right after he said that one comment that I posted in the alert room that I forget what it was. Bye-bye. Bam. Right on up near that 41.55, and that 41.55 is going to continue to be your resistance area. It is going to be an area that you'll be able to use moving forward into today, and I'll zoom out a little bit more and show you why that is. That 50 is that 41.55 is your 50 retracement to the all-time highs. And as you can see in this gray zone where we've landed to, it is definitely a place of congestion for bulls and bears. You've got your lows over here from early March, middle of March. You've got your Russian invasion low right there at 41.15. There's your high over in September. Here's our bumping our heads over in November, again in December, or twice in December, because that was December 1. And here we are, we have pierced through it. Now, this isn't your grandfather's market where you're going to retrace this today, but it is something that you do need to be looking at when you are going to be moving out forward. And how I've charted this is I have this as an AB with a C, and this could be an ABC for the C. And this cannot be a 1, 2, 3 where the blue lines are drawn, simply because you overlapped when you fell down here. So that negates that. So this is undoubtedly an ABC. Whether this was an ABC up here and you want to argue it, it's completely up to you. But I'm looking at this as an A1 up here into 4100, the B2, and then when you extend upward, which we'll do here real quick, you have a cluster of the minimum wave 3 wave at 43.73 and what would be your 161.8 of the C wave up here at 43.67, which once again supports everything that I have been saying for months now, that we are going up to 43.50. We're going up there no matter what. So what we're looking at coming in here now would be a dip somewhere back down into that 3,900 range, no lower than that 37.64, which would negate this bullish upside move. But I would not expect you to be going back down below that 3,900, 3,910, not until we go past summertime or something not programmed and not on the schedule happens over there in Russia and Ukraine. But that's what we're looking at eventually. So now, as we have the full moon coming up, We'll look for a little bit of a dip, start looking closer to the next full moon as we head into the CPI and everything else. When we do get a nice oversold, then we will undoubtedly be looking forward to the upside move. And quick move on this as well. If you are in the further dated puts and those further dated puts are priced lower because you did not get into them yesterday, it's nothing to worry about because, like everybody else that held stock through 2022, yeah, your pricing has gone down. But at the same time as your pricing going down, so has the VIX. VIX broke 1811 and we're down here in the 17s. You have a double whammy when you're holding your puts further out because not only are you getting the appreciation with the price movement towards your strike, but you're also getting the appreciation of the price in the implied volatility because you are getting a spike in the VIX. So don't worry about your further dated puts, nothing to be concerned about as of now. What I'm showing here now are the futures, and I'm going to have to click over from one to the other because it is what it is. But I'm showing the 4 hours just to display how overbought the 4 hours have become as of right now. This was our big spike over here in December, just so that you can relate to it. That's where we're at right here on the Russell. On the YM, the Dow should be something to be concerned about as you had the bearish cross. Sorry, you had the bullish cross well up over here where you put in the high back in the middle of December. And all you're doing is trolling this 50-day moving average as of now with a running sell divergence over on the 4 hour as you have topped out in this area, which you are going to have an extremely difficult time getting through that 34,000 over there on the Dow. And I don't see any reason why it is an area that will be getting broken anytime soon. You are going to be looking at a little bit of a retracement down to the downside on the Dow. As of now, where everything is on the NQ, on the NASDAQ. Everything is on the NASDAQ. And the NASDAQ is still well below anything of any kind of significance. It doesn't get out of bear market until way up here at 13,400. Another 1,000 points needing to go up higher. And right now it's up 1.5%, 1.4% overnight with a gap to be filled due to Facebook and the implementation or the effect that Facebook had on everybody else as we go into GAGA reporting tonight. Here you are on your 4 hour, and as you can see here, your 4 hours extremely peaked up here in the 90s, just as you had over here back in, what was this, January 23, as you had over here on that December spike. So again, something to consider if you are chasing the upside. And bring you back over here onto the ES. And the ES, not so horrific, but yes, it is displaying some significant signs of concern for the upside. And at the same time, we're right up here at the December spike high, 4180, right there at the 50 retracement to the all-time, or yeah. Come over here on the SPY, and you've got your same thing, that 414.10 spike from the CPI report back in December. And we're right there at it, right at that 414, the 50 retracement to the all-time highs from the dip that we had over the course of the year. Nothing significant from a structure of any kind of wave count other than really just being a consolidation, which I've shown over there on the SPX, on how we have been all during this period here, just going back, I'm only going back here to middle of May, and how we've just been in a congestion zone over here. This looks a lot cleaner than it does over there on the SPY chart. But again, everything wants to say that we are going to be going up to that 4,300 area. When this dip does come through, then we will be able to adjust for an opportunity to get into a much stronger move to the upside with that. But as of right now, you're scalping anything to the upside, understanding that 41.55 and where it's at. Zoom out just so that you get an idea as to what I'm looking at. And you can see here, this is your congestion zone that you have been in. This blue level all during that time period. When we broke down below it, it was very simple to get broken back up above 3,900, back out of the bear market. And now where we're at is very limited, I would use for upside movement. We've gotten that 41.19 like we needed to. We broke through that 4,100. 4,100 will be your downside to be playing. If you do break below 4,100, very obvious that 40.40 is going to be holding for you. So you've got 4,100 on the downside, 40.40 maximum to the downside over behind that. 41.55 to your upside, and you seriously have to be in FOMO land if you're going to be looking for that 4,200 level. 42, 42.25 for the June lows, or I'm sorry, the January lows of 2022, right up in that zone. So you've got about 75 to the upside, maybe about 100, 150 down to the downside. And when we do get the full moon curl over, we'll be looking for something down here in this 3,900 range, around 200 points. So I apologize for taking too much of your time. I'll see you guys in the chat room.